Rick,
There he is.
hello.
Hello, how are you?
Great. How are you today, sir?
Good, good. Other than being 72 years of age, everything is perfect.
But you look like 55, then it's okay, I guess.
Flattery will get you everywhere, but consider getting glasses.
yeah. But do you hear me great? Everything, the sound quality works?
Yes, sir.
Okay, thank you. Rick.
And this way?
Yeah,
you can hear me fine?
I hear you, I see you, and I think I improve a little bit my English since last time, so you can understand me a little bit better. But yeah, it was, I think, 3 or 4 years ago since we had our last meeting online about gold, silver, the mining stocks, and the market in general. And I think everything changed. And today, I think, is a great day. Maybe we will see gold at 4,000. It's now at 3,955. Silver is interesting. A lot happened this year, and I have here a list about a lot of questions because I really have to say you have a big, huge fan base in the German-speaking area. When I advise clients about investments or stocks, and everybody says gold and silver, all that everybody mentions Rick Rule, what he has to say about this topic. And I think that's a huge potential for your investment media because the people in Germany and in Austria, they want to learn. And I think they're asking about the online platform, the investment media. And we are thankful and grateful that you have time today for us.
Well, thank you.
Patrick, let me know when you want me to start the recording.
Yeah, we can start now if it's okay for you. So yeah, maybe I will start with the first question. 4 years ago, when I interviewed you, I was employed at a investment firm in Austria, and nobody was talking about gold and silver or precious metals. It was hated. Nobody wants it. I remember gold was at 1,500, and I started to advise the clients to buy physical gold. I did not earn a commission or something, but I said, from the investment, take 20 or 10% and buy physical gold. And that turned out to be a great investment because we have now gold at nearly 4,000, silver at nearly 50. Back then it was at $15 an ounce. And then I got fired because of that. Because the firm didn't want to invest in silver because only in paper and in equity and in stocks. And then I started my own company, and I always was thinking about your statement on gold and silver and advised it. And when my customer base had the physical silver and they started to invest in the mining stocks, in the royalties, now they are asking me what we should do. Should we sell now? How big can this become? And I really don't know what to say because 4,050. Would you? Because I was watching your videos and you said 1/4 of the position you are securing, you are taking a little bit off the table, but how far really such a bull market in gold and silver can go?
Well, you asked a lot of questions, so
Yeah.
I'll try and answer them in reverse.
Yeah.
How far can this go? My belief is that the US dollar, and by the way, the euro too, will lose 75% of their purchasing power over the next 10 years.
Yeah.
There's history for this. We accomplished that in the decade of the 1970s on both sides of the Atlantic. Gold traditionally does well when savers are concerned about the maintenance of their purchasing power in fiat-denominated currency instruments. If you believe, like I do, that fiat currency-denominated savings products will cost you 75% of your purchasing power over 10 years, you are, of course, concerned.
Yeah.
In the decade of the 1970s, which we can look to for a historical perspective, the US dollar did in fact lose 75% of its purchasing power in 10 years. And it's worth noting that in that same year, or in those same years, pardon me, the gold price ran 30-fold up.
Yeah.
Now, I'm not telling you, and I do not believe that gold will run 30-fold from here. It's already run 12-fold since the year 2000. The run in gold, 9% compounded against the US dollar for 25 years, suggests that gold will maintain its real purchasing power and rise in nominal terms to match the deterioration in the purchasing power of fiat currencies.
Yeah.
If Patrick, you believe, as I believe, that the purchasing power of the US dollar will decline by 75%, it makes absolute sense that the gold price, at least in US dollar terms, in nominal terms,
Yeah.
could rise in mirror fashion to the decline in purchasing power of the dollar. That would suggest, if it occurs, an increase in the gold price in US dollar terms of between 3 and 4 times in the next 10 years.
Yeah, that's, I know it sounds crazy, but I really think from the mathematics standpoint and from the money printing that it could be possible that we see gold near 20,000, not because it's a guess, because I think when we have, like you said, in the 70s with the stagflation, where the economy is weakening, but the money printing starts moving again, and the dollar loses the value, and we have printed in the corona crisis so much money, and you see in the equity market, Facebook and Meta, the prices are not normal. So when gold reaches just the medium, came back to the fair valuation, I think 10,000, 15,000 is a normal basis for gold.
Rather than get yourself very excited about some headline number
in
the US dollar, which is after all a floating abstraction, I would urge your listeners to think of it this way. Gold will maintain its purchasing power.
Yes.
That's what it will do. So rather than have your listeners focus on 10,000 or 12,000, I think the appropriate thing to do is encourage your listeners to maintain liquidity in the euro, but to maintain their purchasing power in gold. I think it's also instructive to note that in bull markets, the stocks always lag the metals. But over the course of the market, the stocks outperform them. In the decade of the 70s, while gold ran 30-fold in the decade, the stocks outperformed them almost 2 to 1. You save in gold, you invest in the best gold stocks, and you speculate, if you would like to speculate, in the smaller companies. But in that order, buy the physical gold or gold surrogates first. Invest, if you're an investor, in the best of the best gold companies, and then speculate in the rest of the sector if you have the time, the willpower, the discipline, and the courage to do so.
So I think that's a great idea, and I listened to your advice when you said buy first the precious metal, gold, silver, then the market changes to the best of the best mining stocks, and then to the explorers, and down the quality trail, you said. And I was hunting for these silver miners, like for example, New Gold or First Majestic Silver back in 2020, 2021, and I was looking at a chart where New Gold fell to 50 cents. Now it's at $7, and that's already a tenfold when you bought when you're pyramiding down and you have, like you said, a huge time window. Then I think the next 5 or 10 years, 5 years will be great in this sector, because I don't see anything else like cash in the moment to hold.
I don't understand your question. I mean, I think I heard what you said, which is to say that many gold and silver stocks are up a lot.
A lot,
People analyze and price resource stocks based on the discounted net present value of their free cash flows.
Yeah.
And the value of a company's cash flows at $46 silver, $45 silver, or $3,900 gold are dramatically higher than they were 4 years ago.
Yeah.
We did an exercise this year at the Rule Symposium in Boca Raton, Florida, our premier educational event. And we showed that on a net present value basis, Agnico Eagle was cheaper with the stock price having doubled than it was before the stock price doubled, because the increase in the gold price had given Agnico Eagle so much more operating margin that on a net present value, it was actually cheaper. Now, investors who do not believe in the underlying thesis, which is that the gold price will continue to increase from here as a consequence of the deterioration of the purchasing power of fiat instruments, should not buy the gold stocks.
Yeah.
If your listeners believe that the decline in the US dollar in real terms is over, or the decline in the euro or the pound in real terms is over, they should not buy gold stocks. If they believe that Eurozone debt and Eurozone unfunded entitlement liabilities will be solved in the next 10 years, they should not own gold. If they draw the conclusions that I draw from reading the newspaper, they should own gold, and they should understand that the gold stocks are not overvalued. I need to return to something that you said earlier, which is to say that I personally have sold some gold stocks.
Yeah.
In my speculative portfolio, which I've been building for 5 years.
Yeah.
Through that period of hate that you documented.
Because
I put a lot of money in the space, and that portfolio is up so much now, so fast, that I can sell between 25 and 30% of the portfolio, which is to say I can give up 25 or 30% of my upside, and I can eliminate all of my downside. I can recoup all the money I've invested in the sector over the last 5 years, plus pay the capital gains tax. Many people have not built as large a position as I, as aggressively as I. So they have less gains to protect. They don't need to do what I'm doing.
But I think that is really the smart way to accumulate positions when nobody likes this stuff. And I think it's not only gold and silver, it's in the crypto market, and it's in every market. When I think there's this famous quote, when there's blood in the streets, the Rothschilds are buying. I think that is something true. And now the smart people like you, the big investors, they are starting to selling small portions into the masses, I guess, because the upside, we don't know where it could go, but you are now in a safe free trade position, I guess, because you have a free trade now with.
Correct. It's worth noting, too, that the money that I'm taking out of the juniors, half of it is going back into physical gold and the shares of the best miners. I expect the juniors to outperform the seniors, but I'm looking for safety. The other half of the money that I'm realizing by selling my juniors is going into the oil and gas business, which is truly and thoroughly hated. I'm probably 2 years early. But I found that 2 years early is better than a week late.
That's true. I was thinking about the oil and gas. I don't know. It was a video from you 1 month ago or 2 months ago. You started to mention the oil and gas companies. And I think Warren Buffett is also on I saw a chart where he has the highest cash position now, and he started to invest in oil and gas. And it's always the same, because the people want to make the money quick. They are not capable to have the patience. But I think that the sitting early makes it a huge money, I guess.
When people look at the fact that I'm selling gold stocks now for huge gains in the juniors, they neglect the fact that I built up that portfolio over 5 years.
Yeah,
As you suggest, many people have very short time frames, and people with short time frames never make money.
yeah,
The real wonder of the investment world is compounding.
yeah,
Buffett himself said that he has not made money by thinking. He's made money by sitting.
yeah, yeah,
That he became one of the wealthiest men in the world because he was disciplined and he lived for a very, very, very long time.
yeah,
It is likely that his oil and gas portfolio doesn't pay off for him for 2 or 3 years.
yeah,
But 5 years from now, people are going to look at that portfolio and say, oh my God, he did it again.
yeah. I heard this quote from him once where he said, like a baseball player, he not only has 3 shots, but he has hundreds of them, and he can wait, and when the perfect swing comes, he only just to hit once, and then it's over. He has this massive gain, and I think it's the better way, like you said, 2 years ago, First Majestic Silver. I was looking at Fortuna Silver. I remember the day I was playing ping pong with my friends, and I have the timing alert, and there was Fortuna Silver hitting down under 50 cents. Now we are at $9.80, and it's already a 20-fold. And I was watching all the time these 10 stocks and started to accumulate small positions, but the real money, as you said, is made when everybody hates this spectrum.
Probably the real money is made before that. Probably the real money is made for a young person like yourself by investing in their own education,
Yeah,
by learning how to value resource stocks.
yeah, yeah,
It's difficult in the speculative side of the market because I would suggest that fully 80% of the listings worldwide are worth nothing. And if you put your money into the wrong stocks, and most of them are the wrong stocks,
yeah.
over 5 years, if you make money, it's only because you're lucky.
Yeah, that's
So-
true.
The first investment that you need to make is in your own education and your own discipline.
Yeah,
When you've done that, when you learn how to value these stocks, it becomes easier to buy in bad markets
yeah,
because the absolute valuations are so low that you don't care what somebody else's opinion is.
yeah, yeah,
I interviewed Jonathan Goodman over the weekend for the Rule Boot Camp. His father, Ned Goodman, was an absolutely legendary investor, and he was a mentor of mine.
yeah,
And John Goodman told the story of when he was a young man going to see his father and asking his father about some company, let's call it, XYZ Gold Mines. And his dad said, well, I don't like it much. I think it's a piece of junk. So Johnny didn't buy it. And in the course of a year, the stock went up 5-fold, 5 times. John goes back to his dad, and he's reading him the riot act for misinforming him. And his dad said, that's your fault, not mine. If you had done the work, you wouldn't care what I thought.
yeah,
You would have bought the stock.
Yeah.
You were lazy, and you came to me.
yeah,
That was your fault. And the truth is that young investors get to take the bow, and they get to take the blame for their performance. They get to take a bow if they do the work,
yeah.
and they get to take the blame if they don't.
Yeah, I think Jesse Livermore in his book said it once that you should never buy on tips or something because he was only looking at the chart and only this times I think 80, 90 or something 100 years ago he only had the charts and he was working only on that and his opinion was counting and not of somebody else.
Sure.
Yeah.
There's a lot of ways to make money. And for a trader, technical analysis works.
Yeah.
But trading isn't a part-time business.
Yeah.
Trading is a full-time business.
Yeah.
If you are a trader, that is what you do for a living. What many people try to do is they try to trade 2 or 3 hours a week.
No, that's
And
not,
that doesn't work.
Yeah.
If you're going to be a trader, you're going to give 50 or 60 hours a week.
Yeah.
So,
I know this from my profession because I have in Austria I'm free concessions, insurance broker. I can make loans for people who want to buy a home and asset allocation, and I doing this for the clients that they want to buy a mortgage house at $500 for their family. I'm financing it, but on the background, when I get my provision, I take everything and I invest everything. I want it so badly to become successful that my expenses are so low, but everything I earn, I invested. So one day you can really live from not the hard work you're working with your hands, but with the capital gains. And I think if you start early and you have good provisions and a huge income and invest it, then you can't get poor, I think. Then it's impossible because, yeah.
No, that's absolutely true. Early on, you have to be very, very frugal.
Yeah.
You cannot get rich based on labor. To get rich, you have to be a capitalist. And to be a capitalist, you have to have some capital.
yeah. There was a German investor, he always said Kapital über alles. And it's like you have a storage house and you are a wholesaler. Without the items in the magazine, you cannot participate in the business. And in our business, and you don't have the capital, you're out of business, I think.
Correct. That's absolutely correct.
Yeah.
Absolutely correct.
Yeah. And my question is, when I always look at the weekly chart, for example, First Majestic Silver or Fortuna Silver. Fortuna Silver is in the upper echelon on the weekly, and with a silver price at 50, how is your gut feeling when you see that? When you see a potential in the silver price to continue up, but all the stocks, a majority of them, are hitting the weekly on the upper echelon, on the resistance line. What are your thoughts on that?
I don't care about resistance lines.
Yeah.
I care about the net present value of future cash flows.
Yeah.
At today's silver price.
Yeah.
At a silver price 25% lower than today's silver price.
Yeah.
And at a silver price 25% higher. I'm looking for leverage to silver.
Yeah.
And I'm looking for net present value at today's silver price. I also judge silver companies against each other, not against silver, which is to say, which companies have the lowest all-in sustaining costs? Mm-hmm. Which companies have the most growth already built in over the next 5 years from projects they already control and can permit and can finance?
Yeah.
Which companies enjoy over time the best return on capital employed?
Yeah.
The truth is that a rising tide can float all ships.
Yeah.
But what I care about is not owning all the ships. What I care about in a 100-ship fleet is owning the 5 best ships.
Yeah.
It isn't for me enough just to have leverage to the silver price. I want durability if I'm wrong and the silver price falls.
Yeah.
And I'm willing to give up some of my upside in return for high-quality companies, irrespective of their size.
Okay. Yeah.
With regards to protection on the downside.
I understand. But the question is, you said first the gold and silver physical metal starts to rise. Then we have the companies and the juniors and we go down the trail. But is it possible if for the short term the gold and silver price peaks and we have a correction, let's say for 10-20%, that in this scenario the silver stocks rise, or will they fall as well?
They will fall more precipitously.
Yeah. So in
more precipitously.
Yeah.
You, in order to play this game, you need to be able to stand both volatility.
Yeah.
Because these stocks can rise or fall 5 or 10% for no reason whatsoever.
Yeah.
Other than the fact that, say, an institutional shareholder got redemptions and had to sell.
Yeah.
In a cyclical decline, not a secular decline, but a cyclical decline in a bull market, these stocks can fall by 50%.
Yeah.
If you aren't prepared to stomach a 50% decline, you belong in a different business.
Yeah. Yes. But when I'm looking, for example, at the volatility index, the VIX is always between 50 and 20, and it's so still. And I saw it in the Corona crisis, and before it jumped over 20. And in 2008, when the equity market crashed, gold fell as well, and the stocks, but they recovered very quickly. And I was talking to one famous German hedge fund manager, and he said in 2008-9, when everything dropped, he bought 600 kilograms of gold, and that price threefold, and then it was great. But when I look at the charts, I have this feeling that we are getting every day closer to that scenario, because everything is crazy expensive. And when the equity market drops, I think gold could as well drop for the short term as well, and then go higher, as you said, to 5,000, 6,000.
History teaches us that you're right. I don't look at the charts very much.
Yeah.
And I need to say, I don't want to tell you the general equity markets are overpriced or underpriced, because I don't know.
Yeah.
I know how to value natural resource companies.
Yeah.
I know how to value banks and insurance companies and asset managers and wealth managers.
Yeah.
In other words, I understand natural resources and I understand conventional financial services. I don't try to value the rest of the market, because there's enough opportunity for me in things that I know that I don't have to do the other things. People say to me, NVIDIA, what's it worth? Patrick, I can't pronounce it. How would I know what it's worth? The consequence of that is I don't care.
Yeah.
I don't go there.
Yeah.
I just do what I understand. Now, what you say about a liquidity crisis like 2008
Yeah.
is extremely true. What happens is that in a liquidity crisis, all assets fall.
Yeah.
Because the sell decision isn't made by investors, it's made by margin clerks. What is also true isn't just that some assets bounce back. It's important to know why they bounce back.
Yeah.
The performance that your hedge fund manager enjoyed happened for two reasons. It happened because financial panics unnerve people.
Yeah.
And people go to precious metals when they're scared.
Yeah.
But more importantly, it happens because governments around the world dealt with a liquidity crisis by making more liquidity, by debasing their currency.
Yeah.
When the European Central Bank or our Federal Reserve prints more currency units unbacked by anything,
Yeah.
they make the existing currency units less valuable.
Yeah.
That's what happens.
Yeah.
And in 2008 and 2009, governments around the world went absolutely crazy, basically counterfeiting.
Yeah.
So it isn't enough to know that in 2008, gold went up after the crisis.
Yeah.
It's important to know why it went up. If you know why it went up, and I'm not saying we will, but if we had another liquidity event, let's say in 2026,
Yeah.
and central banks around the world dealt with that liquidity event by printing a bunch more money and artificially lowering interest rates,
Yeah.
it stands to reason, it is more probable than not, that the same response would occur this time as occurred last time, which would, if it did, be very good for precious metals.
Yeah, because as you said, I think it's always the same game. When the system is cracked, the Federal Reserve trying to lower interest rates, and then they're coming with, when everything is broke, with quantitative easing, and they inject this money in the system, and when it goes down from the banks to the normal people, and we have this inflation feeling in the grocery store and everywhere, then gold and the precious metals will go up, because you cannot print them from the printer. It's limited. When we are talking honestly, I think there's so much money printed that even the 4,000 gold price is feeling a little bit suppressed, I guess, because it should be much higher, because they are printing trillions every month, and the money, yeah.
I guess you're saying now what I said at the beginning of the interview. If, as I believe will be the case, because of debt deficits and quantitative easing, that the US dollar loses 75% of its purchasing power,
Yeah.
I believe that the rise in gold will mirror, at least in nominal terms,
Yeah.
will mirror the decline in fiat purchasing power.
Yeah, yeah. I think that will be true, because in the Weimar Republic in Germany, the people are so afraid of inflation, and back then, when you have gold, you survived well.
Yep.
That,
I'm afraid that generation of Germans is mostly dead.
yeah, that's true. That's true. Yes, yes. But yeah, so I have here gold silver quality. Yeah, the sharp pullback we discussed it is, yeah, and the huge question, when somebody, I get this question a lot, do not own gold and silver and owns nothing and has a huge cash position, and he sees the silver and gold price and mining stock price, and he says, "Poh, I don't want to buy in a overbought market. Should I just wait and have, like you said, in a liquidity crisis, the power to then step in?" I know you're paying the inflation as a premium, as you said, but under these circumstances and now, what would you do when you only had the cash now and no gold? Would you step in?
Yes. I mean, cash is a very good thing.
Yeah.
I have a lot of cash.
Yeah.
Because I invest and spend mostly US dollars, most of my cash is in very short term savings instruments, bank certificates of deposit, and very short term treasuries.
Yeah.
A German would probably want to do the same thing in euros or Swiss francs.
Yeah.
But the dilemma that faces the cash investor is that I believe that the interest yield he or she receives on their cash is less than the decline in the purchasing power of the euro
Yeah.
or the Swiss franc.
Yeah.
What that means is that let's look at my example. The U.S. 10-year Treasury yields what, 10.5, 4.5, 4.6 now.
Yeah.
In a currency that I believe is experiencing compound deterioration in purchasing power of between 7.5 and 8. What that means is that as a saver, I'm losing 3.5 to 4% a year of my purchasing power.
Yeah.
I have liquidity because in the event of a circumstance like 2008, I want to have the ability to take advantage of it.
Yeah. Yes.
I consider the negative yield on my savings to be an options premium
Yes.
on having the cash to take advantage of a liquidity squeeze. But I save in gold and silver.
Mm-hmm.
If the person that you're talking about that has large cash holdings has a business, and if that business is efficient enough that they can raise prices to match inflation, perhaps they're okay holding cash. But if all of their means of sustenance in the future is in cash, they need to understand that 10 years from now, their cash will purchase them 75% less than it does today.
Yeah, I think that is true. I always say to the people with the Big Mac, everybody knows in Austria, you paid 10 years or 5 years ago, $2.50 for one Big Mac. Now you pay €5.50, and it's the double amount. And everybody now realizes quick, yeah, that is true. That's inflation. And
correct.
And
your European Central Bank and my BLS tell us, in my country, they tell us that inflation is measured by the CPI.
Yeah.
Which would suggest to you that inflation in the U.S. is running at about 2.9.
Yeah, but
that's an insanity.
That is not true.
It's truly an insanity. It's a manufactured index.
Yeah.
Gasoline prices in the last 5 years have more than doubled.
Yeah.
Health insurance has more than doubled. Rents have more than doubled. Mortgage interest rates have doubled. The idea that inflation in the United States is rising at 2.9% is a total falsehood. Yeah. And I would suggest that in Germany in particular, I can't speak to Austria, there's probably been a 500% increase just in energy prices.
Yeah, energy prices were crazy. I mean, I have, because I am switching the energy contracts for people as well, and they were in one you pay 1,000 euros per year, and when you switch to this one you pay 600. The price fluctuation was crazy. It was a huge crisis. Yeah, it was extreme, but now it's a little bit coming down. But yeah, I think that is when you ask me, I think that whole scenario with inflation and the shelter prices, the good prices, the energy prices is just to make the average man or woman poor with her savings. When you have 10,000 euros and now the fixed costs are 8,000, then you stay with 2,000 and you are done after 1 year. And I think, what's the matter of the saving then?
And ironically, you still have to save.
Yeah.
In my case, despite the fact that I know that the purchasing power of my dollars is declining by 7.5% or 8%, I still maintain fairly high cash balances.
Yeah.
Because I want to be able to take advantage of a liquidity squeeze if one happens.
Yeah, the flexibility.
In my lifetime, there have been 4 events over the course of my investing career, over 50 years, that have generated really precipitous declines in asset prices.
Yeah.
In my own circumstance, the year 2009 was the best investing year of my life.
Yeah.
Because I had the cash and the courage to take advantage of the circumstance in 2008, rather than being taken advantage of by it. So, ironically, while saving costs you money, you must do it.
Yeah, I think that is a great example, and I think people don't have to trade all day long. You just have to be patient and wait. For example, like in this scenario, 2008, and then have the balls to get in at a cheap price because you evaluate the company. Let's say, I don't know, for example, McDonald's. In every city you have a McDonald's. People eating there, you're seeing it every day that they are eating there, and they are living the last $100 in the McDonald's. So you know when the market share is at a discount, let's say for 90%, then you cannot make a huge mistake when you go in there.
Well, that's I think part of the value of education.
Yeah.
A recent example last year would be Franco-Nevada, which I consider to be the world's finest gold company. Mm-hmm. Panama nationalized Cobre Panama, which was about 13% of Franco-Nevada's net asset value. The investor reaction, the uneducated investor reaction, was to sell the stock off by 42%. The probability was that there would be some resolution to the Panamanian dispute, but it actually didn't matter. Let's assume that 14% of the value went away. Yeah. If 14% of the value went away and the price declined by 42%, arithmetically, it was a great deal. But people who didn't have the ability to do rudimentary fundamental analysis paid attention to the headline and reflexively sold the finest gold mining company in the world.
I think that is actually the thing about the fake news when you're reading the headlines and you follow the headlines. And I think Warren Buffett said, just do the opposite what the headline is telling, then you will make money, I think.
I think that's accurate. If you, I'd hate to say that you just go opposite the headlines, but if you pay enough attention, if you school yourself well enough, that you can contest the headlines, that you could look at the headline and say, this headline was written by a journalist who makes 65,000 euros a year. This person is probably not an expert. I know that the last time I spoke in Europe, I was talking about energy, and somebody from the audience said, Greta Thunberg says. And I remember thinking, what on earth does Greta Thunberg know? Is she an energy physicist? Is she a financial analyst? The idea that because she commands a lot of attention, and to some she's a sympathetic figure, might suggest to some people that she knows something about finance. I would contest that. And I would suggest that people who invest in their own education would come to believe with regards to energy prices or energy stocks that Greta Thunberg, or might I add, Angela Merkel, are not good sources of information. You need to be able to think for yourself.
Yeah, but I think you're right that the German people and in Austria, for what they see in the television or read in the newspaper, they think that it's true all the time, no matter which topic, or it's every topic. But it's
Americans do the same thing. We tend to believe this crazy man is our president.
Yeah. Yeah. But I think in the as you said, in the US, there's everything about the stock market. When you think about Trump, I think he, as a president, he only when the stock market is doing great, he thinks he's a great president, and they are doing everything to hold up the S&P 500. I see it like this, because it's always buy the dip in the US, and until it's not buy the dip at the 110th attempt.
That's not my game. I don't believe that the stock market is a source of information.
Yeah.
I believe it's a facility for buying and selling fractional ownership of businesses.
Yeah.
If I can buy a business for less than I think it's worth, I do it.
Yeah.
When the business returns to fair value or is over fair value, if something else is cheaper, I try to sell it. I have no interest myself in trying to tell your listeners whether the stock market is overvalued or undervalued, because I don't know.
Yeah.
It's not what I do.
Yeah.
And I know there are people who trade the market. When ETFs put some calls and stuff like that. That's not what I do.
Yeah.
I value businesses that I understand in natural resources and conventional financial services.
Yeah.
And I buy them when I think they're cheap.
Yeah.
And I sell them when I think they're no longer cheap. And that's all I do.
Yeah.
I don't talk about or speculate or invest in crypto or technology or currencies.
Yeah.
There is so much opportunity for me in things I understand that I avoid the temptation, which is low anyway, to do things I don't understand.
Yeah, I have a similar approach, because I don't have the money as you have, but I am looking at the chart on the weekly or monthly, and when you started about the gold, and I had a colleague in the job, he was always talking about gold and silver, and he was 2012 with the mining stocks, and it pushed up and then it goes down, and I think that the bottom fishing as a speculator, when you just buy things which are, like, let's say gold and silver is a currency which has a 5,000 year history or over, and when it's cheap, then you cannot make a huge mistake when you buy that stuff cheap. Or I'm missing here something.
I think if you are going to pay attention to the charts, and I've beaten this to death, but I don't, you need to pay attention to my friend Steve Sugarroot.
Yeah.
He said, you find things that are statistically cheap, demonstrably unloved, but in an uptrend.
Yeah.
And that makes some sense to me. Steve would also say that I made a mistake selling 25% of my junior portfolio.
Really?
Steve would say, Rick, the market doesn't care what you think the stock is worth.
Yeah.
And you should continue to hold it until, the 200-day moving average crosses. That's not what I do.
Yeah.
I'm a guy who, might try to buy 2 apples for €1.
Yeah.
And try to sell those 2 apples for €1.75.
Yeah. I see. But there was this famous quote from Jesse Livermore where he says, people sell too early because they are not able to sit on their ass and write this. But on the other hand side, when they are in the minus, they are holding and looking on a losing position, and then I think throwing good money after bad money, because they're trying to buy in a false decision.
Most people don't have enough education. They haven't worked hard enough to have a sense of value.
Yeah.
If you don't know what something is worth, What it's selling for is an irrelevancy.
Yeah.
Price is made on the delta, money is made on the delta between price and value.
Yeah.
Price information is very easy to obtain. You can do it 24/7,
Yeah.
just dial it up on the computer. But the price information isn't worth anything if you don't have an opinion as to value. Is it cheap or is it not cheap?
Yeah.
The fact that the share price went up doesn't mean it's expensive. The fact that it went down doesn't mean it's cheap.
Yeah.
It's the delta between the price and the value that is the determinant as to whether it's cheap or not. And the vast majority of investors and speculators haven't invested enough in their own education
Yeah.
to be able to make the determination whether or not something is cheap or expensive.
Yeah, that's true. That's true. But do you think you can educate yourself with observation when you are long enough in this market and you lived through highs and downs and saw a lot of let's say 20 years and you saw the crises, you saw what is possible to happen. Is that education as well to you or just
It's an education if you think about it, but just watching price action for 20 years teaches you nothing. All it does is get you dizzy. If you start your education by reading a book called Economics in One Lesson by Hazlitt,
yeah.
so that you understand the way the economy works, rather than the way the big thinkers want you to believe it works.
Yeah.
And then, if you read The Intelligent Investor by Ben Graham.
Yeah, I have this book. It's so thick, I think, but it is in English, and I bought it 10 years ago, and it was too difficult to read for me back then.
Well, I'm certain it's been translated. But if you do those two things, and then I say humbly, if you participate in the real classroom, where 15,000 other people are busy educating themselves, you absolutely can educate yourself.
Yeah.
You just have to do it. Most people default to looking at stock quotes on the computer, which are useless. Somebody says, well, Rick, the thing is now selling for 75 cents. And I say, how many shares are outstanding? I don't know. Well, if you don't know how many shares are outstanding, how do you know what it's selling for? You only know what a share is selling for. You don't know what the business is selling for. One of the reasons why some people do okay over time is because they try. And most of their competition doesn't.
That's true. And I think that the investment niche, there are hedge fund managers who were before that a doctor, architect. They're not always some fancy guys from a finance school, because I think the fancy guys because I was as well studying at the Vienna University, and I was always discussing with my professor, because I come from a poor family, I always wanted how to make from €1 €2, and he never could answer me that. He always said, read this book with this big equation and then you understand economics. But I think when a professor who earns just his income by working for it and not investing and not have a business, how he can teach me about business and economics? That was my
I think you're right. I think you need to educate yourself enough so that you can pick your teachers, as opposed to have them picked for you.
Yeah, that's true. And Rick, different topic, because, and I think, I don't know if a lot of people have this on their radar, because I was reading a study about a big investor made this in the German-speaking area, and it is about the side effects of the stuff what happened in 2020, and they have analyzed over 40 insurance companies and banks and people, and the mortality rate. It is significant. That is 30% the mortality rate increasing. People have mental problems. The workforce is weakening. And my question is, when in the studies 95% of the Wall Street guys are vexed, so they don't have this on their radar. What happens if the labor force and the people gets weaker and unhealthy? how such a people can pay off the loans, go to work, so we could have a potential crisis in the productivity. And what is then? Is this a factor?
Well, I think if you look at Eurozone productivity over the last 10 years, you don't need to forecast. You just need to look at the fact that worker productivity in the Eurozone has been declining.
Yeah.
The median age of workers in the Eurozone is increasing.
Yeah.
The share of government relative to GDP is increasing, which means that private investment is decreasing.
Yeah.
Workers' wages increase as their utility increases, and their utility increases as they apply more capital.
Yeah.
But if the governments take a larger share of savings, private investors can't reinvest enough in the business to improve the worker utility.
Yeah.
So worker utility is flat to declining, and hence their real wages are declining.
Yeah.
There are some countries in the Eurozone, not necessarily members of the EU, but countries like Ireland, Poland, Latvia, Estonia, Lithuania, that are doing a better job.
Yeah.
They have, in the case of Poland, younger populations,
Yeah.
and they have more investment-centric tax codes,
Yeah.
so that the private sector can invest in productive capacity and enable the worker through the application of capital to be more efficient.
Yeah.
Unfortunately, for most of the Eurozone and for the United States too, that isn't the case. We have consumption-centric rather than investment-centric
Yeah.
tax and fiscal policies. And in effect, we're consuming our own seed corn.
Yeah, yeah, that's true. Because I am actually from Poland. My parents and I speak fluently Polish, and I have to. In Europe, it's two different worlds. When you go on the rail, let's say on the bus station or the train station, you feel unsafe. In Berlin or in Vienna, every day there's somebody stabbed. But when you go to Poland and you go in the subway, let's say at 12 midnight, you are feeling safe. And the people are there. The economy is, I think, top 5 in the EU, and Poland is also buying a lot of gold. The banks, and I think that all these factors will be difficult to sustain in a environment. And I think the only thing which build a safe haven is then to have gold. Like the Jews after the war, they were buying this real estates in the first district in Vienna with gold. They were. I know that was crazy. Yeah.
I would suggest that your first investment is in your own education.
Yeah.
That knowledge can't be stolen, can't be taxed. You can forget it, you can lose it. But the first thing that you do is invest in your own education.
Yeah.
The second thing that you do is maintain liquidity, but save in gold.
Yeah.
Have liquidity to invest and to live on in euros.
Yeah.
But save in gold.
Yeah.
To the extent that you are able, build a business, either one like yourself where you deliver value to others, or as a speculator.
Yeah.
So that you are in a position to generate more utility for others than you consume for yourself.
Yeah.
That surplus is called savings, and that's how you get rich.
Yeah.
And I'm not suggesting that the only place to save is gold. I think, as an example, that the nuclear power industry is way under-owned, including in Europe.
Yeah.
I think the oil and gas business is way under-owned.
What are your thoughts?
I think.
Sorry.
Go ahead.
What are your thoughts on Deep Yellow? I know you have Cameco and Kazanaprom and all this, but I picked up this stock because there was a famous guy, I don't know, he was famous in the uranium business, and I want to ask a different question. What is your thought on Deep Yellow, so we have a little bit of uranium topic today?
I own a lot of Deep Yellow.
Yeah.
I was the guy who wrote the check for John Borshoff.
Yeah, I think that
to kick the company off. I've known John for 25 years.
Yeah.
I'm up so much on that stock that I was able to sell 12% of my position.
Yeah.
And pay off my whole stake.
Whoa.
So I own a lot, but I have no financial risk in Deep Yellow. I sold enough that I have the rest for free.
Yeah. Yeah.
And in the first uranium run up 5 or 6 years ago, I sold some.
Yeah.
Then the whole uranium sector crashed, fell by 50, 60, 70%.
Yeah.
I'm not trying to say I caught the bottom. I didn't. But when the stocks got cheap again, I bought some back.
Yeah.
The stocks aren't necessarily cheap anymore, so I sold them. Although I have not sold either my Sprott Physical Uranium Trust
Yeah.
or my Cameco, which is to say my investment grade uranium positions I've continued to add to. My speculative uranium positions I've sold some of. And I need to say, Patrick, I have to run.
Yeah.
I've got about 2 minutes left before I have to go to the next interview.
Oh, sorry, Rick. Okay, so one question. So the people who want to educate more, I have here Rural Investment Media. I was looking at your website, so you can choose between two packages. One is there with the 35 euros, and then when you are their member, you get access to, let's say, the investment intensive gold seminar, and everything gets a little bit cheaper, I guess, like a discount.
Well, let's go back. The way you get to know me is free.
Yeah.
Rural Investment Media.
Yeah.
List your natural resource stocks at the website, and I'll rank them for free.
Yeah, I did that. I did that once.
I'll comment on issues where I think my comments might have value, but that's free.
Yeah.
If you go from there to the Rural Classroom,
Yeah.
ruralclassroom.com, there's 230 hours of instructional programming,
Yes.
including Introduction to Natural Resource Investing, which tells you how to value stocks, and that's free.
Yeah.
Free, no charge, no euros, nothing.
Wow.
There is a subscription-based service there, which allows you to ask questions in the weekly Q&A and gives you access to company-specific interviews.
Yes.
And I forget what that number. I forget what the cost is. $20 a month, something like that.
Yeah.
In addition to that, every 3 months we do something called a boot camp, where we have 8-hour-long educational sessions in English.
Yeah.
Very dense, very detailed. That's $99. By the way, absolute money back guarantee. If you go to the boot camp and you don't think you got your money's worth, just email me. I give it back to you.
Okay.
So, Rural Investment Media, stock rankings, free.
Oh, that's
Rural
great.
Classroom, 230 hours of instructional programming, free.
Wow,
Rural Boot Camp, $99, 8 hours out of your life. Absolute money back guarantee.
Great. Okay, I will that advise the people to do that and to learn more about everything. And the last question, 20 seconds, Rick, about Battle Bank. I heard that people can have the gold inside and then have a loan against it. I think that is a great idea. Will you come to Austria or Europe with the Battle Bank as well, so I can join? Because
Our last bank, which was Everbank,
yeah.
took us about 2.5 years to get EU approval
Yeah.
to offer our services to citizens of the Eurozone.
Yeah.
When Battle Bank opens to the public, which will likely be in early January,
Yeah.
those services will only be available to Americans and Canadians,
Okay.
or Europeans that have a corporate presence in the United States, like a holding company in the United States.
Yeah.
We anticipate that our services will be available in the British Commonwealth and in the Eurozone within about 2 years. That's really up to your regulators.
Okay, that would be great, because I have a concession with a lot of banks, and I would to make these loans and the gold. I think that would be a great thing to do, because I have these cooperations with these banks to make this loan and to make the mortgages and everything, and it would be great to work with this new concept when you have a lot of gold that you can, like a credit line, use it. I think
Yes.
that is great. That is great.
We look forward to bringing that product to Europe as soon as the Europeans allow us.
Yeah, I know in the EU it's difficult. It's crazy in the parliament, but yeah. Rick, I am very grateful that you had the time for us today, and Yeah, when you will come one day to Vienna or to Austria, we can show you around. I know every corner there because I live there, and yeah,
I will be in Zurich and then in Frankfurt
yeah,
in November,
Okay.
and I'll be in London late November, early December. So
okay,
I'll be at a conference in Zurich in November, a conference in Frankfurt also in November, and then two different conferences in London in late November, early December. So I am coming across the pond. Unfortunately, this time not to Vienna.
okay. But could we join you and or is this just a private seminar, or is this like open to everybody?
If you email me, I will do my best to get you complimentary tickets, depending on where you want to go.
Okay.
In fact, let's do it this way. Go to Rule Investment Media,
Yes.
and in the rankings thing, there'll be a question and comment section.
Ranking comments. Yes.
Yeah, say Zurich tickets,
Zurich.
Frankfurt tickets, or London tickets. Make no promises, but often I can beat up the conference sponsors as a consequence of being a headline speaker and arrange for some complimentary admissions.
Boy, that would be great, Rick. That would be really great. We will. Yeah, I don't know what to say. Thank you very much.
Patrick, I have to drop off right now. I've got to go.
I understand.
Thank you
Rick.
for the opportunity.
I wish you all the best.
Bye-bye.
Bye bye. Ciao.